Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Mark Marex, senior index specialist with Nasdaq Investment Intelligence. He's here to give us an overview of performance for the Nasdaq suite of indexes in the month of December. Mark, it's great to see you as always. Happy New Year. And if we take a look at your first slide here, as we are well aware of in December, it was really hard to find something that ended up in the green.
Happy New Year, Jill. Great to be back and kind of relieved that that we're into 2023 now, because 2022 is certainly kind of a year to forget in most markets, not just equities, but bonds, crypto, kind of the whole gamut, right? So we track about 100 indexes that are really important to us here at Nasdaq. The first couple, I think, really tell the story of what happened in December, which was a recurring theme throughout the year, right? Which was that you've got all these negative macro headlines around inflation, interest rates, bad geopolitics, and wondering about where the Fed is going to kind of take its foot off the gas in terms of raising rates and not plunge the economy into a recession. And we actually got a lot of good news in 4Q of last year in terms of inflation cooling. The Fed's last rate hike was a little bit smaller than they had been doing all year long, and they're kind of expected to be pausing soon. But what we saw in December was really kind of repeated, hawkish statements from the Fed that they're not necessarily going to take their foot off the gas, that they are going to be leaning towards maybe overshooting in terms of keeping rates higher for longer. And that obviously has big implications in terms of economic growth in the US and globally. So when we look at something like, the Nasdaq Composite, the Nasdaq 100 down around 9% for December, after seeing really nice rallies in October and November, it was a pretty discouraging way, to end off the year. And you can see in that first list of featured indexes, pretty much everything was down. The PHLX Gold Silver Sector Index was the only one to kind of eke out a little gain there of about 0.1%. And then on the right-hand side, in terms of global performance, US was really the underperformer last month. Europe ended up eking out a small gain, and then emerging markets was pretty flat. But, within the US, whether you're talking large cap, mid cap, small cap, all pretty weak, down around 5.5%, 6% for the month.
Yep. And if we take a look at the next set of indexes here, if you look at green economy, if you look at Nordics, if you look at dividend and income, and of course, so many investors looking for dividend and income, we really didn't see much performance there either, only two of them being on the plus side.
Yeah. So, with green economy, the standout there was OMX Wind, which was up 9.5%. That index has been really coming off of some weak performance earlier in the year, finishing the year strong. But most of the green economy space had a pretty rough month. The Nordics kind of, underperforming Europe a little bit. Most of those are down 1%, 2%, 3%. And yeah, as you mentioned, dividend and income, you would maybe think to see a little bit more strength here. The Canadian Preferred Share Index was the one that was really the outperformer here, down only 1.8%. But most of these indexes down 4%, 5%, 6%, which is kind of average with what we saw across the equity markets, no matter where you looked, especially the US. Not much of a place to hide in equities as we wrapped up the year.
Yeah, and what's so interesting, Mark, is fixed income had one of its worst starts for 2022 and actually finished up somewhat in the green for the end of the year. Well, that month anyway.
Yeah. I think people started to realize that, even though the Fed was continuing to be hawkish in its talk, the fact that rates are now moving up less quickly than they did before means that maybe the worst of the pain in fixed income is over, especially when you think about, pricing in an economic recession. That's where fixed income really is meant to outperform, right? It's equities that are supposed to suffer the most leading into an economic recession with growth turning negative. People go into fixed income. So we did see a bit of a bounce, more so in investment grade and emerging market bonds last month. High yield still had a rough month, was still negative and closed down the year weak. Again, with those fears of economic recession kind of gaining the headlines. Not much of a place to hide within the options space. Only one index there, the Credit Suisse Nasdaq Gold Flows 103 index was positive, up about 2%. And then, the Dorsey Wright Momentum Suite, we had seen kind of periodic kind of pulses of strength within this suite over the course of the year. That one, of course, kind of placing a premium on momentum to select constituents for specific sectors or specific regions of the US or of the world. Last month, really, most sectors did pretty poorly. Healthcare in the US was the only kind of outperformer, down only 1.8%. And then just as with the global indexes, you saw emerging markets, international products within this suite sort of outperform, but most of the rest, down in line with what we're seeing, kind of losses 5, 6, 7% each.
All right. And finally, to wrap up here, if we look at the thematic indexes, of course, just one that ended up positive for the month as well.
Yeah. I mean, kind of a mirror image of what we saw with the OMX wind index. Here you've got the ICE Clean Edge Global Wind Energy Index up 1.6%, and really just a massive outlier, right? When you go down this list, you see the biggest underperformer is the Nasdaq Clean Edge Green Energy Index, down about 20% for the year. That's actually, for the month. That comes on, losses earlier in the year, and a lot of these other products, whether you're talking about semis, whether you're talking about cyber, healthcare innovation, any kind of area of disruptive technology, we're just seeing the pain continue, especially in the areas that are a little bit more speculative, right? Have a little bit less in terms of earnings power and cash flow generation today. That's what investors are placing a premium on. But as we know, of course, the pain was spread around fairly broadly last year and last month. The Nasdaq 100, being a very fundamentally strong index, was no stranger to these types of losses either. So let's just say 2022, a year to forget. 2023, hopefully we turn the corner and we have some brighter times ahead, assuming we keep things kind of stabilized from a macro perspective.
All right. Appreciate the insight, Mark. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.